Okay, folks, welcome back to Pete's Investing. It's 24th of July 2024. This is the Nat Gas update. And for Nat Gas, the bullish divergence we projected last time has been hit, and it's now hit a major resistance area, and it's starting to turn down. Before we go any further, make sure you hit that like and subscribe button to make sure you get all the updates, and support us more on the Patreon page where we look at bullish shares. Also, we've got the heat map, and we use the CCI 150 to identify the trends on the monthly, weekly, and daily. You can see here on the natural gas template, Nat Gas, Boyle, KOLD are all neutral at the moment on the monthly. UNG is bearish. On the weekly, bullish on Boyle and KOLD, and bearish on Nat Gas and neutral on UNG, and neutral across the board on the daily time frame. So first looking at natural gas on the monthly, we're broken down into the moving average range on the CCI, giving us a neutral positioning. On the weekly, it's bearish. It's dropped below that moving average band. And on the daily, it's also neutral, but it looks like it's turning into a bearish momentum in the coming hours or days. If we jump to the hourly chart, where the daily here is a reference, remember we only take trades on the intraday in this case. Bearish because the CCI is bearish on the daily, so we only trade on the short side. And that would have happened from the start of the 16th of June, going back to the 16th of June. So that would have been around this point here. You would have taken short trades only. Now we had a couple of bullish divergence back there, and the price did bounce and hit our initial targets. Just clean it up a bit. You can see each of those. That was hit there with that little rectangle. Another target hit there. And now more recently, we did project this bullish divergence, and this was at the end of our last video. We drew this target between a 23 and a 38% level. You can see there it hit it before the end of day there. But then it actually punched through there, and it went as high as 61% and hit this resistance at 22.97. Now it's making a bit of a retrace to the downside. So again, predominantly bearish trades only, and if you're trading on this one, you'd still be in a trade today on Nat Gas. So this is BOIL. The monthly is not showing any CCI, but you can see there it's pretty bearish. On the weekly, we had a bullish divergence here versus lower lows on the price, and that's still declining. So again, so long as that CCI is still rising and the price is still dropping, we're going to consider that a bullish divergence. So that's still declining. We just still and always extend the Fibonacci down to the next lowest point until it starts pulling up from there. On the daily, it's actually broken through this previous support level at 12.01, and now currently sitting on or bounced off that 964 major support level. You'll notice also on the CCI on the daily, it actually was bearish, and now it's actually broken neutral into that moving average range, potentially breaking further to the upside. So we'll keep an eye on that, see what it does. Looking at the hourly, again using the daily as a reference, you've only taken short trades, and that would have been again from about this 21st or the 25th of June. So going to the 25th of June, around from this area, you would have taken those short trades indicated by those arrows, and you would have closed it out somewhere in this range where you started seeing a bullish divergence. So you can actually trade it with and keep it open as long as you can track it constantly, so long as it's below that moving average range on the price chart. Or if you're about to go to sleep, then I'd suggest you close it out early as soon as you see the CCI broken into that moving average range. Now, in this case, we had a bullish divergence. The CCI kept rising. We projected we bounced it off this support at 964. In this case, it's actually bounced off that little resistance area at 12.01. And let me just get rid of that previous support. Now, in terms of projecting where it's going to go to, we draw a Fibonacci to the previous high before that divergence started. So it would be ideally at that point there. And you can see there that lines up perfectly with the 23% Fibonacci retracement. And if I was to draw a target area between a 23 and a 38%, that's where we're expected to hit in the near term. Now, it's actually probably just touched that range, bounce down, but we'll probably see it break higher if this continues more to the upside, especially if it starts breaking higher on the moving averages of the CCI. KOLD on the monthly, it's not showing any CCI indicator, but on the price you can see it's pretty much at the very least neutral, if not bullish. On the weekly, it has been bullish. We did have a bullish divergence as well, and it bounced quite significantly, and we're still now in a bullish momentum, breaking above the moving averages of the weekly chart. On the daily, it was bearish during this period with the CCI below its moving averages. And then it finally broke above from that point, and that would have been ideal to go long during that period because, again, the weekly was bullish, and you would have been more wise to take long trades during that period only. Now, in this case, it actually broke up, and you would have closed out your trade on that first red candle up there because the CCI then broke into that moving average range if you were trading on the daily. If we go to the intraday chart, the hourly, again using the daily as a reference, we only take long trades, and that was from the 25th of June. Again, from this point, that arrow indicated where you would have ideally entered based on the daily trend, and you would have closed it out on that
buy market executed
on that little range there.
Exit with gains.
Now, this is actually, we did have a bearish divergence here, and it projected in our last video up to that high. Now, in this case, we bring that trend line to that new high. Now, that's still a bearish divergence, and that aligns with that high there. Now, you'll notice here it's dropped, broken through the target area of the 38% level, and hit this new support at 59.53. It's a minor support, so just keep an eye on that. But at the moment, the CCI is broken above the moving averages. But at this point, I would not go long or short until I saw the daily break either above that range or below that range. So just keep it keep your trades off the table at the moment. Next, we look at UNG.
Buy at market executed.
Monthly, it's
exit with gains
for a couple of years now. On the weekly, it was bullish last few weeks, but now it's broken into the moving average range. It's a bit hard to see there, but it's actually neutral. And on the daily, it was bearish, and it's broken into that moving average range, so it's also neutral. Now, that was after hitting this support at 13.58, and now hitting this resistance at 15.20. So that we may actually see it break to the downside again, so I'll keep an eye on that. Going to the intraday chart, using the daily as a reference, you would have taken short trades from the 25th of June. So from that period back there, that would have been wise to take short trades, a bit similar to the previous chart. If you weren't watching it, I would have taken closed the trade out if you started seeing a bullish divergence, like you started seeing it back there with higher lows versus lower lows on the price. Now, in this case, it kept extending up until that point. It bounced off that support at 13.58. And in this case, if I draw a Fibonacci,
buy at market executed.
Previous high, you can
exit
see there's
with
just broken
gains
through that 23% level, and that 38% range is hit more than 90% of the time when we have a bullish or bearish divergence. So hopefully you got something out of that video. Hit that like and subscribe button. Support us more on the Patreon page where we look at bullish shares. Thanks for watching, and see you in the next video.